The Nasdaq 100 gapped down overnight on Sunday, following the impressive short squeeze rally we had last Friday. With big tech earnings out of the way, the focus this week shifted towards the Fed. We came within a whisker of filling that gap on Tuesday, however price fell back below the 11,480 support level after job openings came in stronger than expected. You can see in this chart a rebound in job openings, suggesting the labor market in the US remains strong. It's this kind of data that backs the Fed into a corner, into continuing rate rises. That's what hit the Nasdaq 100 on Tuesday. Then came the Fed on Wednesday. 75 basis point rate hike as expected. Initially markets popped up, as the statement suggested the Fed may consider easing off the rate hikes. But Fed Chair Powell changed that quickly when he spoke in the press conference, using language like, "We have a ways to go on inflation," and that it was premature to talk about pausing rate hikes. He also said that the so-called terminal rate, or the level at which rates peak, would likely be higher than the Fed previously stated. Now previously, the Fed forecast rate would need to be around 4.5%. Goldman Sachs a few days ago forecast rates to peak at 5% in March. Europe is in a similar situation, with Eurozone inflation hitting a record 10.7% year on year. So expect rates to continue to rise in Europe too. What the Fed really want to see is the economic data beginning to weaken. If the job market weakens, that will help reduce demand-led inflation and we'll begin to see inflation head lower. The Fed wants asset prices to come down because the excess liquidity they provided during the pandemic went into the stock market. I've shown this chart before, the Fed balance sheet versus the S&P 500. The massive spike you see in the Fed balance sheet saw money flow into the S&P 500. You can see as the Fed balance sheet begins to taper off, the S&P 500 has come off. This trend will likely continue, so good news is bad news for the stock market at the moment. The ADP employment report on Wednesday confirmed this as job growth picked up in October. Though this headline came out suggesting the labor market is about to weaken, with Amazon pausing hiring for corporate workers. Going back to the daily chart, the Nasdaq 100 held the 40-day following the Fed on Wednesday and closed the session below 11,180. Price has since retested the blue trend line support around 10,800 and has remained below it following the stronger than expected jobs report on Friday. We also had Fed officials on Friday talk about slowing the pace of rate hikes, and that is likely to keep the sellers in check for now. This is all the market wants to hear right now. When is the Fed going to slow down and take it easy with the rate hikes? In terms of levels to watch into the close, 10,800 remains key resistance. If we push above this, 11,180 is the target. Stay below and we look towards 10,540 and the recent low at 10,433. Below that and it's on to 10,180 to 200. Next week, the main event is the US inflation number for October, which comes out on Thursday. That will be the one to watch. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.